Ladies and gentlemen of the crypto space, we are live on Wednesday, 1:56 p.m. in the afternoon, September 9th, middle of the week, somewhat the middle of the September month. And there is some crazy stuff going down, which is why we're talking today to best understand what the heck is going down. Oh, that's the only way to proceed. We need to ask the questions. Now, whether we're asking someone else or asking ourselves, a question is a question. And attempting to answer the question is how we better ourselves, better our choices, our decision making process. All that fancy philosophical shit. Digibiter just nibbles in the house. What's up? Outlook on band. Let's hit that right away. Paul S. Yes, from Germany. Berlin. I love it. We're global, baby. That's how we do things. Investing in disruptive innovation. Yes, we're trying our best. I mean, let's. Nathan says, I can't believe in my based. Oh, my man. Come on. Come on. Based. It's like sushi. Do I even have it up anymore? No, I've closed it at this point. There's like $800 million or something locked in sushi the last time I looked. I don't give a crap. I have no time for that shit. No time. What does anyone really think they're gonna take 100 grand, put it into sushi, and turn it into like 200 grand? Has anyone done that? Because if someone on this channel has done that, big props. You get that golf clap. Now that's a good deal. I don't really care. Does anyone really care about turning 1,000 into 2,000? No. We need some wins. That means we got to protect our gains. That means we need big wins. That means we got to turn 10 grand to 20 grand, 20 grand to 40 grand, 40 grand to 80 grand. That's how you get to those big numbers. In many regards, that's what I pulled off since March. I don't know whether it was luck or experience from 2017. And a strong macro narrative, a story that I built, talking about how the dollar and gold and equities fit into a big picture related to crypto. And that is how these gains have been produced. All right, Band. So Band, let's put it this way. Chainlink is dominant. They're in first out of the gate. They got all the momentum. They got the disruption. Um, there's clearly FUD all across the board for Chainlink and Band at this point. I have no whether the folks the owner operator CEO of Band was behind, who cares, behind sushi. No, that is what I care about is the fact that there's technology that is needed. Link has proven that it can provide Oracle functionality to smart contracts. There is no doubt an inevitability that another Oracle will provide such functionality to smart contracts. And to date, thus far, the second most likely provider of such functionality appears to be Band of the competitors. Now, there's a couple of other names in the Oracle space, but Band is the most prominent. So it's gonna be it's speculation investing no matter what. My role is to encourage responsible speculation, minimize risk, maximize reward. In fact, minimize risk, minimize reward in most instances. I'd rather minimize risk and have minimal reward than take any risk at all. I want to take as much risk off the table as possible, albeit without risk, you cannot have gains. So that's why we're not all in dollars or gold for that matter, or just minimize risk positions. We have to take risks, which is what we've done. And that is what I've encouraged over the last couple months. And if last week, 2 weeks ago, I was encouraging risk off. Um, there's the videos before last Thursday when we had our significant risk off event where everyone was taking risk off the table. But there are my videos from last Wednesday, last Tuesday, last Monday, and the week before that where I was encouraging risk off. Protect your gains. You've worked way too hard, and the market was overwhelmingly euphoric. Now, what could I say about how things played out for myself? I probably should have taken more risk off. But am I satisfied with the gains that were protected? Absolutely. I'm quite satisfied. Let's pull up the main screen and let's look at some data. Let's look at some charts. I believe I have Tesla up here. Who else is in the chat? SP's in the house. RR's in the house. Barry. I only buy sushi I can eat. That's right. I'm hungry. Got to figure out what I'm going to do for food around here. Barry is in the house. And Manchu, thoughts on Wi-Fi fundamentals? Good deal. You're in finance. Good deal. They're the original. I have no interest in forks and spoons, and I have no time. I have other things I have to do. I have other things on my mind. I want to program. I want to dabble with smart contracts. I want to do my research. I'm looking in on other YouTube content creators. I have work I have to do for companies. I don't have time for the bullshit in the crypto space. What I have time for is understanding the best possible investments that are identified with the amount of time I can apply to looking at crypto fundamentals. We're looking at fundamentals, no doubt, and technicals. Technicals override fundamentals, which is an event we're overwhelmingly in, because I've talked about fundamentals for the last couple months. And those are the assets I look at. I identify the assets that I have most interested in, most interested in, based on fundamentals, and the technicals drive my choices and my actions. Because I'm sure as hell not going to sit back and hit a 50% drawdown after getting all these gains. So the appropriate thing to have done is sell on the way up and on the way down. That's the bottom line, boys and girls. Scott's in the house. Always a pleasure. Yeah, my man. What do you think of Kathy Wood? I don't know off the top of my head. Who's Kathy? I don't. I need more information. Captain Weber's in the house. Always a pleasure. Barry, Ren is sexy. Barry, is one dark note enough? Philip, Orn? Orn, I don't know who. Orn 2, in my opinion. No idea what Orn is. Ren? Okay, from a philosophical, a conceptual, from a technological perspective, Ren might be the most profound fundamentals in the entire crypto space, along with other very meaningful players, but Ren stands out. It is a first out of the gate disruptor of interoperability and cross-chain functionality. Now, there has been FUD that is reasonable. The fact there is centralization of control. And there can be bad actors because of the centralized control. Is there intentions to get away from centralized control? Yes. Is there intention of the platform to be decentralized? Yes. Does this centralized control exist in traditional finance? Exist in traditional companies? I've been burned so many times by equities. At least with the crypto space, I see potential to disrupt the legacy business and financial space. I see so much more potential with these crypto assets as compared with these equities. How many times I've been burned by lithium miners and junior miners and graphite miners? No. I have no more interest in that kind of centralized risk. They say they have deals, they say they have letters of intent, and it all looks like a bonfire at the end of the day. Might as well take it. It looks like an explosion, a fire when the stock price comes crashing down because nothing these CEOs say comes to be. Now, over the next 10 years, I expect probably even the unexpected junior miners to bear fruit. But we have to think time horizon. Got to make some gains between now and the next 10 years. So I think that's where crypto space is primed with regard to volatility. Albeit we have the volatility in the broad equity space, but from a risk management perspective, I don't want to wait on assets that have a time horizon of 10 years to be more likely to bear fruit. I want my time horizon to be now. And I think with regard to the financial volatility that's going on, specifically with regard to the dollar, I think crypto performs the best. It has the best inverse correlation to the financial um, volatility that we have seen. Inverse correlation, that is the most interesting observation that I've seen thus far. We have the dollar, and bam, look what happened. The dollar slammed into the 200 EMA on the 4-hour, and what do we get? We got a bam, 515 points on the Dow, 294 on the Nasdaq. 72, 72 in the S&P, and what do we got? We got a gold rip through the 200 EMA and the 30 min. So, is there not an inverse correlation? And look at the broad, here, let's filter it by 24 hours. Look at the broad bounce in the crypto space. This is not what it looked like yesterday. And look at the winners. Who are the winners? DeFi, Yearn is second biggest winner. Solana did something with Tether today. It's a level 1 blockchain. It's really not on my radar at all. Loopring is an L2 solution for Ethereum. That is overwhelmingly on my radar as one of the assets that I still have a position in. Sushi, I'm just going to laugh at this point. Aave is one of the most important crypto assets in the entire space. It's a systemic disruption. They were the first lender and borrowing platform in 2017. They started the year with in the thousands of dollars of loans, and now they have how many? 1 point something billion dollars in value locked TVL or AUM. And there you go, run with a 14% rip to the upside. There is a reason these assets are the ones that have ripped to the upside. But guess what? Well, let's go with that thought. There's a reason. Look, reserve rights, financial, stable coins, synthetics, derivatives, Cosmos, and Polkadot. Where's Polkadot? Tell me Polkadot definitely bounced. So let's find out. There you go. Polkadot bounced 7.4%. Kyber bounced. AMM. Kusama, Polkadot Canary Network. OMG, potential second layer for Ethereum. Chainlink. Bam. There's your bounces. Come on, guys. There's a reason why this shit is bouncing. It fits into the big picture, and it's the stuff that I have up on the board here. It's the stuff that I've been following. It's not these Uniswap, tiny whatevers, financial manipulations, YFI2, YAMS. Well, but then bear in mind, look at sushi up on the big board. So what the fuck am I talking about in some regards? Oh, what's going on? Buy RSR. Barry, yes. Philip, I don't know about Orion Protocol. I just don't know. And Barry mentioned one dark note enough. That is everyone's decision to make. I myself took a beating on Ren. Ren obviously did a 14% bounce, but for the day, obviously, I wish I had. I wish Delta gave you a monthly. Oh, it does give you the monthly. I have to go over to the chart. No, but I don't have monthly for individual assets. That's unfortunate. I'd love to know what my monthly, because there's a 3 months. It must be a positive because I must be up 500% on Ren still at this point, even though I'm almost at a 50% drawdown at this point. What I love to look at is my Bitcoin position, up 159% since March. So that is my gains. I do not want to measure my gains. As much as I'm tempted to measure my gains in US dollars, is that really what counts? And this reminds me of 2017, and we don't see that in the Twitter space nowadays. We don't see the old school folks reminding us to measure our gains denominated in Bitcoin. Folks are running around and measuring their gains in dollars. Measure your gains in Bitcoin. Measure your gains maybe in gold, but I'm sure as hell, I'm tempted sure to measure and see. And it hurts to watch 100 chip, 100 grand go bye-bye in dollar denomination. But what if you doubled or tripled your Bitcoin bag and then Bitcoin goes to 100 grand a pop? No, it's all about perspective. Long term, short term, don't worry about the short term. Short term's going to fuck up your mind. Think about the long term, think about the big picture. BZRX, genuinely different, says yes, they are to be considered. But what's the cap on them? They've been on my eye. So let's pull up the cap on them and let's pull up the platform. Uh, Shit, how do I even pull the platform? Let's pull up. Let's go by CoinGecko. BZX. There you go. That's why. Yeah. So Torque and Fulcrum are quite interesting. Fulcrum, I believe, is their leveraged trading platform. Uh, but yes, so I don't want to take too much time. Suffice it to say, what are they? 93 mil? Yeah, they're look at that. Bam, 32% rip to the upside. So BZRX is cool, and they broke out. So they were in a falling wedge for a bit, and I saw the beginning of that breakout. Um, they had a smart contract complexity a couple months back, but who hasn't at this point? And the whole point is how the platform moves forward, and I think they look good. There's something to keep an eye on, but I'd rather. Here, let's look at Ren for a second. And market cap's got to be 277. So, it's all about how much capital you're playing with and how much risk reward you want to take. Listen, you want to throw $1,000 into BZRX? Cool. You might have to go for that level of risk to get some decent gains because $1,000 isn't going to do much in the long run. If you can turn $1,000 into $5,000, that's a nice win. Never mind, you're going to have to pay taxes on that. But if you want the big gains, you got to throw around 10, 15, 20 retirement funds. And you're not going to throw 10, 15, 20, 30 grand into some Uniswap high volatility asset. You're simply not going to throw. Who's going to throw 50 grand into something that's running around at 70 million of a market cap? You're playing with fire. You're playing with big risk. It's just what it is. Now let's take a look at the big boards. Now let's look at some shit that you're going to throw, 100 grand against. You're going to throw 100 grand against Chainlink, but not now. You're going to wait for the market to stabilize, but that's the type of asset that 100 grand isn't going to mean much in the total market cap, and you're going to get 5, 10, 50% gains. And that is much more reasonable than to look for 20, 30, 40% gains on 100 grand. That is much higher risk because you're just as likely to get 20%, 30%, 40% of a drawdown. And you're going to watch all your hard-earned value evaporate. So it's all about timing the market. Let's talk about the market right now. The market right now, I think, is totally in a bounce, and this is bearish territory. And it's so obvious looking at the 7-day with these minus numbers, and then looking at the 24-hour, you got some big rips to the upside. But you are still down for the week. And what does that mean? That is a lower high. So let's see what it prints on the lows. Let's see if it prints a lower low. So I am totally in risk off mode. And I started the stream looking at Tesla. Guys, this is so risk off. Anyone who was down here and didn't sell when it ripped up this morning to 360, oh goodness. Ay, ay, ay. Ay, ay, ay. That is not what I see when I see this. When I see this, I see bearish. And I see further downside action to come. In some regards, it's driven by in almost all regards. I'm really basing a lot of what I'm seeing at the macro level on the dollar. And that makes sense. The dollar is the wrecking ball. Look at this. What do you see here on the 4-hour? Bam. You got a divergence. You never hit oversold on the dip down. You got clearly positive sloping averages on the guppies. And look, you're in green territory, pushing up against the 200 EMA on the 4 hour. And then you flip over to the daily, you're overbought. So it's very hard to draw a conclusion just looking at the 4 hour and the daily for the dollar. And that's what's basically pushing the market around. And look at all the resistance above head on the dollar. That is a lot of resistance. So what I would look for to see how this market's going to get pushed around is clearly a break above the 200 EMA on the 4 hour. Like a rip to the upside, we get to, 90, 93.75, 94, and that's going to be a clear breakout. And that's going to put a huge amount of pressure on equities as well as the crypto markets. And clearly, the inverse correlation between gold and the dollar. Gold gets rejected by the 200 EMA, but look how powerful the dollar is. How much leveraged firepower it has. It moves by pennies, and it pushes around markets. You know, it moves by pennies, and it's able to. People just are exiting the dollar. It moves down a little bit, or people are out of the dollar and they're into something else. And that's just how much power it has. Absolutely incredible. Absolutely incredible. Paul brought up Ave. Let's take a look. So Len broke out from what was obviously somewhat of a sim triangle formation. Other people have drawn it better than myself lately. But I saw the fake out breakout pattern where it dips down below support and then rips to the upside around the outside of the triangle. I've seen this several times in the way I draw charts, and I'm not surprised. This is one of the few charts in the entire crypto space that's above the 200 EMA on the 4 hour. I don't even think Atom is. Look at that. Atom is rejected by the 200 EMA on the 4 hour. That's unfortunate. But really, the only thing on Atom that catches my eye is the fact that we're above this long-term cross-year resistance line, this green line. As long as I'm above the green line on Atom, I'm content. But guess what? I wouldn't even liquidate even if I wasn't content, particularly because you have a 21-day hold when you remove your delegation to a validator. So you can't even liquidate if you wanted to. So that's a nice protocol property of Atom, the Atom Cosmos hub. That's the way they designed it. That's good stuff. Jason's in the house, my man. What's up, brother? Much a pleasure. It's good to see a bunch of names showing up, saying hi, looking for some information. David, no, any comment on sushi and FFT? Just sushi in general, brother. No, no. You sure you could spend? You want to play with fire? Go for it. You want to play with fire? I'm not going to say no. And look, Zippo's offline. Where's? All right. I can't even see the sushi market cap right now. Here, let's go through CoinGecko. Well, I don't even want the market cap. What I want is the TVL. I want how much they have locked. But sushi has been converted to an AMM. I don't know. What a waste of time and effort. What I want is structure. What I want is functionality. What I want is financial tools and utility that make the legacy financial system look deprecated. And those are AMM protocols that are not memes, that are not manipulations, that are not attention whores, that are just legitimate projects that are moving forward. And Lend and Aave is one of them. Lend might be one of the most significant players in the crypto space. They offer lending and borrowing functionality. Currently, that's over collateralized, and with platforms like Teller Finance, you can have under collateralized, where you're able to assess a credit risk protocol that's algorithmic. And let's look up Aave, and I want to show you why. Aave's UK banking license. And Aave wants to issue mortgages, and it'll all be automated by smart contracts. That's it. This is disruption of banking, and what's and the disruption of AMMs are partially the disruption of banking, but the disruption of FX companies. They provide instant interoperability and liquidity without requiring human intervention. And that is why stuff like Uniswap, stuff like Curve and Balancer are so important. And frankly, stuff like StakeNet and BlockNet and JellySwap, they're meaningful in the big picture. And they will be more meaningful as they garner adoption, which they will. It's inevitable. And BlockNet is really close. They've been close for years. And let's see where they are. No, that's BlockDX. Let's look up their Twitter and see what they said. Today, by the way. Was it today? Come on, where is it? The X Lite wallet is damn close. Is that September 7th? 2 days ago. The X Lite wallet is the brand that they've gone for. StakeNet has released theirs as well. And I think as time continues to move forward, we're going to have UTXO AMMs combined with obviously the Ethereum market makers. But this is the future. The future is really this is the future. The future is I have an asset, I want another asset, I'm able to trade from my asset to another asset in a very nice, simplified, no questions asked, automatic, Pathfinder engaged user interface. D-app connects right to your account. I have, really? Ah, okay, so they denominate only in WF. What a pain in the neck. So I have whatever. I have something and I want something else, and I'm able to trade from something to something else. This is the future. How do we get here? Is the projects and assets that I look for to appreciate over time, because this is clearly the future. And then you go on Aave. So look at these two tabs right up here. And this should really give you a great sense if Aave decides to load today, because Aave gives me some complexity sometimes. So in the meantime, we'll load compound. So this is banking right here. If you don't see that, and you see that this is just DeFi and just crypto and whatever the hell's been going on the last couple months, it's short-sighted to say the least. Come on, connect them up. So I'm able to lend to other people and get APY. I'm able to borrow and pay APY to achieve a leveraged position. And to borrow, you need to supply assets as collateral. What does this sound like? This sounds like a down payment on a mortgage. This sounds like a collateral provided for a home equity line of credit, which is your damn house. And here you go for Aave. Really, look at this interest, this yield, this real yield to be made, and there's no risk. The only risk is the smart contract itself. So right now, Aave has 1.7 billion dollars worth of assets, TVL, and the only risk is the contract, the logic, the software in the contract. Otherwise, that all goes as planned. There's no risk in if you lend your basic attention token, you're going to get 12.12% because anyone that borrows has provided over 100% collateral for their debt position. So if there's ever a shortfall, if the value of the collateral decreases in a flash crash, the collateral will be liquidated to fulfill the debt obligation. So there is no risk in the debt policy, the debt strategy, which is all algorithmically controlled. The only risk is in the software itself. And $1.7 billion has taken the smart contract risk because the policy is so damn undeniable. This is so disruptive of legacy financials. I'm so bullish on Aave from a fundamentals perspective. Absolutely incredible. But as I said, technicals override fundamentals. And that's where we look at the Aave chart. This looks good. It's nice to see a breakout, but it's not a higher high. It clearly took a big dip over the last couple of days. You know, we're down 15%. And you have to look at the macro. The big boobas in the room. That's Ethereum and Bitcoin. That took a fat rip. And what literally, what's so disturbing about really the cause of the fat rip, it's all the dollar. It's this stupid rip to the upside. Look at the dollar pushing everything around on this planet price range. The 2% rip in the dollar throws gold for a tizzy. That's Bitcoin. Where's gold? 2% rip in the dollar. Look at this price action. 1944. Oh, so all things considered, you guys know my opinion. You guys know my opinion. What the hell? Why am I accumulating dollars? I use dollars as a means of exchange because every schmuck, every stupid business in this country accepts dollars because they don't know any better. Because they're stupid, pretty much. Because no better, except it's awkward to accept gold, but there's no reason you can't. You have a pen for those $100 bills. You got to have something to validate some gold, but you can. There's QR codes and ways to validate, but it'd be awkward. It's a bit awkward if you're going to pay with gold, but crypto is 100% instantaneously verifiable. So this is where the system is heading with regard to payments. Getting away from fiat as fiat becomes increasingly devalued and debased. And the purchasing value is destroyed. Load them up, baby. Load them up. Because that purchasing power is sure as hell being destroyed constantly. 1% per month, 12% per year. 5-year hours, 12 point. San Jose, California is absolute tragedy. You got $1 million last year. You got $890,000 this year in purchasing power. It is literally being destroyed. You could stare at your bank account all you want and see $1 million. No, no, no. That number is not the same. You guys know what I've told you. That number is constantly going down. That's the biggest lie in traditional finance, that you look at your bank account and it's a static number. No, that number in your bank account, it's constantly going down. It does not go up. It just goes down. Which banks would show purchasing power. Who cares about how many dollars you have? You care about how much you could purchase with those dollars. That is the biggest lie. And you have a certain amount of money. The amount of money you have is constantly going down. That's the way you got to think about it. So the goal really is to accumulate stuff that retains value. Accumulate gold, accumulate crypto, and in some regards you could accumulate equities too. But that sure as hell is volatile, and clearly fundamentals are dead in the equity space, so that introduces a great deal of shit. My man. David says sushi is a fork of Uniswap. Yes, that's right. And, it's what Chico Crypto talked about, David. Sushi has captured violently a fair amount of Uniswap's TVL. Crazy, crazy times. It's become like pirates. Arg. RevVM has just surpassed half a bill in TVT, total value transacted. Pretty damn awesome. For me, Ren was about 10% of my position, of my overall portfolio in March. Um, Ren at one point was 20% of my entire gains when I was at my all-time high, and Ren is currently sitting at about 25% of my overall portfolio. That Ren was at one point I was up 1,100% on Ren. That was crazy. The amount of gains I had on Ren. Now, bear in mind, IRS, these are all unrealized gains. I bought Ren and they're locked in dark notes. So, okay, just saying, there's nothing realized there. Period. Yeah, Mock Chapwood Index, big deal. Yeah, Philip, gas is high right now. Let's take a look. I keep gas up here. I mean, listen, gas was up at 4,500. So I'm just saying, gas is manageable right now. This is relatively cheap compared to the numbers we've seen. But it's not like the beginning of the year where we were in the 30s. 8. See some relatively low standards. Thank you, Joey. I appreciate it. All right, 1232. Let's see if there's anything else. Showed you guys well, this is Fulcrum, but what I showed you guys Maca. And this is the simplest AMM user interface in the space. Clearly, 1-inch exchange may be the most powerful and the most sophisticated pathfinding service, but it's relatively sophisticated user interface. So generally speaking, just leave all of these checked, and you're going to get a conversion of one asset to another. I got a little Ethereum left. I moved everything around. Everything. This portfolio is cleaned up. I am entirely risk off at this point. Um, I think Bitcoin looks good, but where are we? Where are we? We're at 10,221 a Bitcoin. Can we break down? We break down to that six. Where's that's gold. Here's Ethereum, Bitcoin. So can it break down? Sure. I think we can get maybe to 6,000 a Bitcoin, and that'd be pretty crazy. 40% drawdown from where we are. And it's really all about the wrecking ball. If the dollar decides to break out really of the sim triangle formation, where did I draw this? Did I draw it on the monthly? No, I think I drew it on the daily. Yeah. So look at that sim triangle on the daily. Where did I draw it? I thought I drew it better than that. So clearly we're at the bottom of support, but we are maxed out on the Stoke, and it looks like we're primed for a bearish Stoke traversal to oversold. Um, this is the war right here. This is the war of the dollar bulls versus the dollar bears. You guys know that the dollar bulls and the dollar bears have the same outcome. It's the crushing of the dollar. It's the devaluing of the dollar. And that's been stated as the direct intention of the Federal Reserve is to crush the dollar. They want inflation. They want to let inflation run hot because they need to devalue the dollar. Because if the dollar, there's a deflationary, the whole system came under strain because of a deflationary crisis where the need for dollars around the world to fulfill a quadrillion dollars of debt, it was so great. There was so much demand for the dollar that it was driving up the price of the dollar. And that was basically here. And we spiked up to was no doubt the trend line, but has proven to be another hit on the trend line. Let's see. Let's go back to the weekly and the monthly. Hmm, quite interesting. I wonder what that trend line looks like. Let's take a look real quick. It's funny how little lines on a chart are so meaningful. Well, if the dollar rips through something like that, that would be some serious breakout action. And there's your deflationary implosion. A trend deviation of that magnitude, dollar demand, you know how many trillions of dollars they would have to print in order to get the deflation under control? So the Fed fears the deflation because there's way more debt than there are dollars. So that is why they're way okay with inflation running hot. They fear inflation much less than deflation because a cheap dollar, a deflated dollar, is means it's cheap to do business with the United States, and that'll buy them time, and it'll give them time to build out some sort of strategy for the dollar. Because clearly China, with their BSN and their digital renminbi, is doing some serious things with digital currencies. Now, the digital currency is far superior to the dollar and the historic traditional banking system. The MMT that's achievable with the digital currency is not achievable with the current incarnation of the dollar. Look what they did with the CARES Act. They sent people checks, paper checks. It took months and months. You can't do what you need to do with MMT with the traditional dollar. You need a digital version where you can instantaneously disperse the dreaded word, the quote unquote liquidity, to anyone and everyone where you need it to go. The IRS has entered the chat. Yes, IRS. Oh, what a ridiculous system. Exit fiat. That's just the perspective that, if anything, I can convey about my personal beliefs and opinion. It's just get your money out of dollars, get your value out of dollars. It's an absolute ridiculous system. All right, everyone. Always a pleasure. Thank you very much. 12:38 on a Wednesday. I'm going to hit you tomorrow at 12 noon. Keep you up to date on the markets because the markets are ever changing. We're going to keep an eye on the dollar because this thing is the wrecking ball, as we talked about yesterday. No doubt we talked about today. We're going to keep our eye close on that. And I am looking for some serious price targets on Tesla. This is what I want. And I maybe if the dollar pops a bit, it's going to crush equities. Be nice to grab Tesla at around $100 a piece. So let's keep an eye on it. See you tomorrow at 12 noon. You all have a wonderful afternoon. Thank you all for joining. Talk to you soon. Peace.